I have a question. Are you an introvert? Well, that's a problem, right? Because if you want to pitch to potential investors, it's a huge problem. If you're not a person that's really good in speaking and talking ideas to potential investors, it may be a problem for you because you'll probably get intimidated seeing someone. Imagine this: you're in an elevator alone with your idol who is potentially your next investor. What do you say? I don't know. But in this episode of Retail Fashion Business, I'm going to be sharing with you the beginner's guide to pitching techniques to potential investors. When you're creating, we call it a winning impression, when meeting people, what I call your possible investors, it can make all the difference when it comes to the future of building your brand and your retail fashion business. Here's the reality of investment when it comes to fashion. Since my brand was acquired recently, well, in a few years ago, and investment when it comes to fashion labels is not very common because investors, they tend to shy away because they always look for automatic high returns. I mean, high return on investment in a short amount of time, especially if the investor has never had experience in fashion. Here's the thing. A lot of businessmen have money to spend, to invest, but they don't have the ideas to expand their business. Hence, you have investors from different sectors funding businesses which they do not absolutely understand. So that's a problem. Though there could be some exceptions. Most fashion investors, they come from a background in the industry, meaning they're into fashion, where it be probably in designing, conceptualizing, even in logistics, like the raw materials as well and supply. I mean, that's part of fashion as well. My tip for you, number one, would be to look for investors who will provide business advice and connect you to a network that you have not tapped yet. So your suppliers or your customers could be your possible investors too. So always keep an eye on that. Never close your doors on possible investors. I always say, hold on to being the sole proprietor or the sole business owner of your business for as long as you can, but be open to potential investors. I'm gonna give you 7 or 8 different pitching techniques that you can use to potential investors. Some of them might work for you, some of them might not work for you. I'm gonna talk to you about what we call the elevator pitch, wherein you have 30 seconds or less to get to a first meeting, and a simple template for what we call breaking the ice when you meet your potential investor that is probably not your friend or just a friend of your neighbor, something like that. Let's go on to the first pitching technique, which is understanding what your potential investor wants from you. Knowing what they are looking for will make you pitch more successfully. And research your investors, including any of their previous public investments. I said public, okay? Because it's hard to know investments that are private. Know more about what you can find out from the field or from just Google or Facebook and on social media. Know where they invest their money in. So that's number one. Understand what the investors want or are looking for. If you already have a target in mind, you can research about them. Like for example, someone researches about me. So they type in my name on Google, on Facebook, and they will see the businesses that I'm in or I'm interested in. So that makes sense. Let's go to number 2, which is to keep it short and simple. The goal here is not to overwhelm them with information about your business. Go straight to the main point and help your potential investor or your audience what you are trying to persuade them for in the shortest amount of time. You can provide more details if they have shown interest later on. Remember, it's like giving them a taste of a 6-piece nugget, but you don't give the 6-piece nugget. You just give them a nugget and let them dip on your sauce. You don't give them the entire nuggets. Or, when you give a pizza pie, you give just a piece of the pie, not the entire pizza, or else someone might steal your ideas. So be careful of that as well. So that's number 2. Keep it short and simple. In addition to that, you don't want to sound impressive. You want to sound that you are understood. Being understood is a lot better than sounding impressive, because when you sound impressive, you use flowery words that may be needed to be searched on Google or in a dictionary. You don't want that. You want to use simple words. Number 2. Number 3 is you want to engage your audience audience or your client, your potential investor, instead of reading out your entire script, ask your investors some of the simple questions for more interaction. Ask them more questions rather than you talking or having more talking points as well. And raise their attention, because the more questions that you ask them, the more that they'll answer and the more they'll be engaged with you. Also, encourage them to ask questions anytime they feel like asking questions. Nothing is off the table when they ask questions about the business. So that's number 3, engage your potential investor. Number 4, avoid using any sort of template. Here's the thing. You want to tailor your pitch to fit every company or every person that you're talking to. Just because the pitch worked for another person does not mean that it will work for the next person, and so on and so forth. So everything should be personalized to fit the person that you're talking to and your investor's interest and probably their needs. Instead of using a commonly seen type of formal script that you have, this will help you fit the needs of the investors and stand out from others that you talk to. Or for example, potentially your investor could be someone that talks to so many people. They might see you as somewhat just similar to everyone else. So hence, even if you have a nice product, you don't stand out to them. So that's number 4. Avoid using templates. I would rather use outlines and then create talking points from those outlines that you want to say. That's how I do it when I do live talks or seminars, is that I have an outline in my head of what topics I want to talk about, and then I go about each topic one by one as much as I can. Moving on to the 5th one is to be clear. Being clear, concise, and precise about your ideas, and you want to provide transparency, especially about your financial situation. A lot of the deals that happen in the famous show Shark Tank don't happen in fruition, like in truth. Like for example, they agree to shake hands on, let's say, a 5% ownership stake at a company for $500,000 when someone said that they make about $5 million a month, when in fact they're taking a loss of $500. So if you're not honest with your financials to your potential investors, then most likely the deal is off. A lot of deals that you see in Shark Tank, you follow it up after a few months of being checked, doesn't happen. Just because it was a great pitch, but it was all based on a lie. That happens a lot, and happens a lot in real life as well. And put it in detail per month and per year, annually, as a report, such as balance sheets, break-even analysis, profit and loss. Those are important. Month by month, cash flow, etc., etc. There's a lot more that's out there. Even your potential growth as well. That's something you can talk about. So your potential investors can understand your business a lot better. Here's the thing when it comes to money. People think that money is a magic wand. Like for example, if you have a business and your business is making, let's say, 2 million pesos a month gross. Imagine if you have a funding of 50 million pesos from an investor. They put in more money, so you have more money to make more money because you're already making 2 million without anybody's help on your own, but you're still struggling. The thing is, you're making net of profits, not gross, because I don't know what your margins are. I'm assuming you have good margins. The thing is, if you're making that money, then that would interest someone to add more money, because no investor is dumb enough to say, oh, I'll invest in your business because you're losing 2 million pesos a month. If you say, oh yeah, by the way, we're making about 1.5 million pesos a month, but we're actually losing 2 million a month. So would you like to invest 50 million in our business? Hell no. No one's going to invest in your business because of that. Money is an amplifier. It amplifies whatever it is in business. If it's not making money, most likely the money will not save the business. It will just be most majority for a loss. It's rare that it gets revived. There's really no chance. If you have a business and you've been running it for 3 years already and you're still not making money, it's not a business that you're running. You know what it's called? It's called a hobby. That's what it's called. You don't have a business. So be clear and be honest. That's number 5. Number 6, you want to be as realistic as you can, especially when it comes to your ambitions and your projections. Show you're ambitious, but don't carry it away by the hype that involves with your business. That's one of the mistakes I made. I carried myself because of the hype of the business that I have to a fault where it was wrong already. Present a business plan that's supported by facts, by data, and by results, such as projected cash flow, growth plan, and even results that you have and the ability to actually repay your potential investors. Imagine if you're asking 50 million for investors and you say that you're going to repay them in a year's time, wherein you're only making $1 million a month. It's not realistic. It's just a glaring example, right? A lot of people actually do that. Include, for example, store orders, pre-orders, or any proof of interest from certain retailers. One of the things I was able to sell my business for was that I have a set of retailers globally who were interested and actually who had pre-orders ready of our product. So that helped a lot because there's potential involved in it, especially with the funding I only had back then. So that's very helpful. So number 6, be realistic. Number 7, be prepared for whatever happens. Be prepared. Before an investor commits to funding your retail fashion business, you have a thorough investigation or on your plans, your team's capabilities to execute the plans for you in designing the business or managing the business as well. Think of 1 to 2 backup plans that you may have for worst case scenarios that could happen if your plan A does not work, and any difficult questions that they may ask you as well, like an FAQ. Show that you are well prepared for that meeting or that presentation that you're going to have with them for different situations, so that they can see that you are capable of problem solving or tackling any problems at hand. Investors like the idea of having a partner who's a managing partner of problem, because in business you're always dealing with problems. If you're just showing the problems and not giving a viable solution, you are not a good managing partner or a business owner. You are just like another employee who rants about the problems of the business with no concrete idea and plan on how to solve that current problem. Does that make sense? That makes sense? Leave a comment in the comment section down below, guys. And lastly, you have exuberant confidence. Not cockiness, confidence. Confidence is important. You know, having that small swagger in you that you know your thing without sounding too arrogant is key. An investor likes someone who is very sure about their business. You know, again, I'm going to give example in Shark Tank, wherein there are nerdy people who pitch their business and know and have complete grasp of the floor when they pitch to their potential investor, just because they know what they're talking about. They're not talking about from just a script or what. You know, it helps that you have a good script and all, but you know your numbers and you're confident enough when you speak about what you're trying to talk about. Potential investors, they could ask you questions and challenge you in every detail that you pass on to them. Don't panic and don't doubt yourself. You yourself know your business more than I actually do, because you've started it, so you know more about the business. So don't forget that. Believe in what you have created and show that you have the potential to expand to a much broader and larger market. That's when they get excited. The potential of your brand reaching a broader market. So that's number 8. Be confident. I talked about earlier about what's an elevator pitch, right? And I've talked about it. I'm just gonna go in short detail about what an elevator pitch is. Although it doesn't have to happen in an elevator, okay? It doesn't have to be, oh, we have to go into elevators so I can pitch you. It could be like, you know, you saw someone going straight to the parking lot towards his car. Don't go to him in a creepy way, right? You know, in one of the movies wherein you're gonna stab them. No, not that kind of creepy. Call their attention, call their name, and although I said it doesn't need to be happening in an elevator pitch is a conversation starter that aims to convince someone about your products in a very short period of time. About 30 seconds or less. If you can do that in 30 seconds or less, that's great. A 30-second pitch can help make a good impression and possibly start another conversation in another meeting about your business. Remember, these investors are investing in so many businesses. Their time is very precious. For them to give you 30 minutes of their time to talk about ideas and potential investment or a joint venture agreement or a partnership with you, whatever it is, doing business with them, for them to give you 30 minutes of your time, that is gold already for you. Whether they accept it or not, be thankful for that. Don't forget that. Here's a template for you to break the ice. We call it breaking the ice. You can start off by, hi, I am blank, insert your name. I'm the founder or the creator of blank company, and we offer blank your product or your service, whatever it is, for enter your target market and to serve the purpose of the product or the service. Unlike those you can normally find them in the market, we enter your unique selling point, and we recently add a recent milestone. So just to probably give you an example, hi, my name is Antonio Aguirre. I'm the founder of ABC Company. We offer high-end products for high-end customers for the niche target market of potentially A and B. And the purpose of that is to solve certain problem in the industry when it comes to this and that. Unlike those you can normally find in the market, we are the only ones that offer this kind of service, and we recently reached 500,000 in sales for the first time in a year. And then you can talk more, you know, just be honest. That's the most important thing. You see how precise was that? Everything you give them in detail in less than 30 seconds. I hope I did that in less than 30 seconds. But that's a great template for breaking the ice and doing an elevator pitch. I hope that helps. Here's one last thing about funding rounds. There's 5 stages into that. Well, the number 1 stage is the initial funding. So capitals from angel investors who provide more favorable terms. That's the first stage. The next one is what we call the seeding round, wherein you're generating capital for funding the business. It marks the very beginning of turning your idea into an actual business. The third one would be Series A. We call it Series A. It's where the venture capital firm term comes in. It optimizes products in your user base is how it's created, as well as scaling products for certain different markets that you may create based on that. The next part would be with Series A, some companies go to what we call Series B, D, and some go straight to what we call IPO. And an IPO is called an initial public offering, wherein certain stocks are available for the public to buy. And that's where big money really comes in now when your company goes public. So in the Philippines, I think going public requires about 500 million pesos in funding, right? Somewhere around that space. If you have a business that you currently have that you're running, and with all the details that I told you about, is there a potential type of interest in your business? If there is, think about how you can offer that business to your potential investor. And let me know if you have a business in mind, leave it in the comment section and maybe we can talk about it. That's it for Retail Fashion Business. See you again in the next episode.